While the world was wondering about the trigger for a flash crash on cryptos at the start of the week, and that even as stocks and gold extended their record-breaking rally, although the Fed's much-anticipated rate cut, cryptos did not gain as expected, and that raised doubts about their sensitivity to monetary policy. Now, in this next report, we deep dive to find out if crypto traders had preempted the Fed's warning on future rate cut challenges. Take a look.
On Monday, when cryptos endured a flash crash with over $1.7 billion liquidated by traders, not many could come up with an answer to why. Especially as Wall Street stocks extended their record-breaking rally of over $16 trillion from April lows. And gold rallied to fresh all-time highs driven by global geopolitical risks. Although the Fed delivered on its much-anticipated rate cut last week, cryptos did not gain as expected. Instead, digital assets saw their values tumble, with the top tokens Bitcoin and Ether hitting multi-week lows on Monday. That raised doubts about their sensitivity to monetary policy. Well, at least until Fed Chair Jerome Powell's speech on the challenges to the rate cut path. Now the reversal is on display. Cryptos have gained a touch. While the rally in gold and Wall Street benchmarks hit a snag, the contrasting moves at the start of the week and now point to a deeper question. Was there an early signal crypto traders picked up before investors of other markets? On Tuesday, Powell indicated that the projections for employment and inflation remain subject to uncertainties. The Fed boss emphasized that decision makers are likely to encounter challenges as they consider additional interest rate cuts this year. That despite the Fed's own projections suggesting 2 more rate cuts this year compared to just 1 in July. More importantly, the Fed boss did not provide any hints of cut next month as he did before the September easing. The Fed chair said near-term risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. Powell, referring to future rate cuts, added, 2-sided risks mean that there is no risk-free path. What's complicating the Fed's policy path is lagged surge in inflation from Trump's tariffs. On the other hand, the job market is showing significant weakness. Well, clearly, Fed policymakers need to tread a balancing act. Opposing views of any future Fed moves bring the widely known catch-22 phrase, and damned if they don't. The other argument for Powell's cautious tone is to show the world that the cut last week was driven by economic reasons, rather than Trump breathing down his neck. Treasury Secretary Scott Bessent conveyed his dissatisfaction with the lack of a clear agenda from the Fed boss on the rate cut path. Powell did address the difficult political atmosphere around the Fed. He also hit back at allegations that the central bank had made politically influenced policy decisions. The Fed chief said, "We're looking at what's the best thing for the people that we serve." He added, "Truth is mostly people who are calling us political. It's just a cheap shot." The broader market reaction is taking into account those risks, while cryptos seem to have preempted the Fed's challenge. Business Bureau, WION World is One.